Happy Wednesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. US consumer confidence edged higher in July as Americans grew more optimistic about the economic outlook and labor market, according to data released yesterday by the Conference Board. The confidence index rose to 97.2 from 95.2 in June, slightly above economists' expectations of 96. The report highlighted a divergence between views on the future and present. A measure of expectations for the next 6 months jumped to 74.4, the strongest reading since February, while the gauge of current conditions slipped to a 3-month low. The improvement comes as concerns about the broader economy eased following the signing of the sweeping budget bill earlier this month, which made 2017 tax cuts permanent and introduced new incentives for business investment, though critics remain concerned with the long-term fiscal sustainability. Quote, while some consumers were upbeat about the potential economic boost from the legislation, others expressed concern, end quote, said a senior economist at the Conference Board, adding, quote, however, the bill and its implications were relatively low on the list of themes that consumers were focused on in July. End quote. Despite the rise in overall confidence, signs of labour market strain persisted. The share of respondents saying jobs were hard to get climbed to 18.9%, the highest in 4 years, while those seeing jobs as plentiful also rose, but by a smaller margin. The gap between the two, a key indicator of job market strength, narrowed to its smallest since March 2021. Separate government data showed job openings dipped in June, pointing to steady but cooling demand for workers. Economists warn that consumer spending likely slowed in June after adjusting for inflation, even as a buoyant stock market helped lift sentiment in the University of Michigan's preliminary July survey. Rising tariffs are expected to feed into the Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures Price Index, in the coming months. The survey also revealed mixed signals for household finances. More consumers expect their incomes to rise over the next 6 months, yet buying plans for homes, autos, appliances, and vacations all retreated in July. Meanwhile, the share anticipating higher interest rates in the next year fell to a 5-month low, suggesting expectations of a softer rate environment. The data underlie a fragile balance. Consumers are cautiously optimistic about the future, but remain wary amid trade tensions, labour market shifts, and the lingering effects of elevated inflation. Though we note in the last week, major agreements have been reached with the likes of Japan and the European Union, with other countries likely on the way too. Next up, we move to Asia. Foreign direct investment, FDI, into Indonesia fell 6.95% year-on-year in the second quarter to, in US dollar terms, $12.3 billion, marking the sharpest decline since early 2020, that is, in 5 years. Figures, which exclude the financial and oil and gas sectors, highlight growing investor caution amid global and domestic headwinds. The investment minister attributed the decline to mounting geopolitical tensions and policy shifts, dampening foreign appetite. Quote, geopolitical conflicts are increasing, and at the same time there are many policies that hinder it, including the US, which is withdrawing its investment in the country, end quote, he said at a press conference. He also underscored the need for stronger human resource development to attract international capital. Key sectors benefiting the FDI include base metals, mining, services, transportation, warehousing, and telecommunications. Singapore, Hong Kong, and China remain the largest contributors. The decline comes as Indonesia undergoes a political transition following the election of President Subianto. His administration has prioritized social programs such as a nationwide free school meal initiative, raising questions over fiscal space and policy continuity. Economists warn that uncertainty over regulatory frameworks and infrastructure readiness may also be weighing on sentiment. The data was released as the Indonesian president was hosting Malaysian Prime Minister Anwar Ibrahim for bilateral talks in Jakarta. Despite the current slowdown, the investment minister maintained that Indonesia's medium-term prospects remain, quote, promising, end quote, citing abundant natural resources and a young, growing workforce. And this is indeed the case. However, he also warned that FDI growth will likely remain muted unless the government signals stronger policy continuity and reforms to restore investor confidence. Meanwhile, today, Wednesday, Singapore's central bank left its monetary policy unchanged despite mounting economic headwinds, as US tariffs tariffs cast a shadow over the trade-dependent economy. Unlike most countries, Singapore manages its policy through the exchange rate, adjusting Singapore's dollar value against a basket of major trading partners to maintain price stability. Economists were split ahead of the decision, with half predicting the Monetary Authority of Singapore, MAS, would ease policy settings. In its statement, the MAS noted that global growth has been more resilient than anticipated since April, citing steady manufacturing output and a surge in trade orders ahead of the end of the US's 90-day tariff pause. However, it warned that momentum would likely moderate as front-loading efforts fade and policy uncertainty rises. Quote, prospects for the Singaporean economy remain subject to significant uncertainty, especially in 2026, end quote, MAS said, showing risks from renewed trade conflicts and global slowdown pressures. While the US has seen deals with many partners, of course the big relationship that between the US and China will likely continue to be defined by competition and escalating trade conflict. Indeed, we'll be discussing this in approximately an hour on my other channel, China Update. On trade, Singapore is seeking concessions on sector-specific tariffs, particularly for pharmaceuticals, a cornerstone of its export economy. But the trade minister said Washington was, quote, non-committal, end quote, during his recent US visit, and has not engaged in detailed talks on exemptions. Singapore eased policy earlier this year after growth concerns linked to tariffs, but held rates steady this time amid a fragile recovery. Authorities expect growth to cool in the second half of 2025 after last year's 4.4% expansion, but this year's forecast still at between 0 and 2%. If you want to be on top of the most up-to-date analysis on the biggest developments at the world's most important markets, consider subscribing to Market Update. And if you're getting some value from today's episode, don't forget to hit the like button. And finally for today, we move to Europe. Novo Nordisk suffered a dramatic market rout on yesterday, with its shares tumbling 23.1% and more than 60 billion euros wiped off its value after the Dutch pharmaceutical group slashed its sales and profit forecast. The company is now down almost 60% year on year. The warning underscored the mounting threat from US copycat weight loss drugs and intensifying competition from rivals. The Danish manufacturer of Ozempic, one of Europe's largest companies by market capitalization, now expects full-year sales growth of 8 to 14%, down sharply from its previous estimate of 13 to 21%. Profit growth guidance was cut to 10 to 16% from 16 to 24%. Novo blamed weaker than anticipated demand for Wegovy in the US due to the persistent use of compounded copycat drugs, slower market expansion, and aggressive competition. It also flagged softer expectations for Ozempic in the US diabetes segment and Wegovy in several international markets. The company's problems stem partly from 2022 shortages of both its and Lilly's weight loss medicines, which led the US Food and Drug Administration to temporarily permit alternative versions to meet demand. Although the FDA rescinded that allowance earlier this year, Novo said illicit supply persists and vowed to pursue litigation against what it called, quote, unsafe and unlawful mass compounding. End quote. Despite the grim outlook, Novo reported an 18% rise in sales and a 29% increase in operating profit for the first half of the year on a currency-adjusted basis. Still, the turbulence spilled over to the wider sector, with Eli Lilly's shares sliding 5.6% on fears of a looming price war in the booming weight loss drug market. However, analysts cautioned against aggressive discounting. Quote, Novo would be short-sighted to create a price war, end quote, said Evan Sagaman of BMO Capital Markets, warning it could erode the lucrative market both companies are fighting to dominate. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Wednesday, and I will see you for another episode tomorrow.